we think the tech sector in general is becoming interesting, so we're in more of a wait and see. But that depends on the individual sector, because when we paint the entire sector as tech, it's too broad. So let me break it down into two parts. There's the hardware sector, the manufacturers or the assemblers for consumer electronics. In general, these companies, while they are pretty cheap, the ongoing trend seems to be a little bit concerning because a lot of the products that they assemble are sold in the developed markets. And in the US, in Europe, the economy there is weakening and the consumers are having a bit more problems. And so in those areas where sort of more waiting instead of buying, then maybe the exception there will be things like LCD makers, because the panel prices have declined for over a year now at below cash cost. So at this supreme level of depressed valuation, they look interesting. The other part of it is more the big internet names. And as you say, the regulatory risks, we think domestic regulatory risks are probably gone for now, but the listing risks coming out of the US are probably still there. So investors got to pay attention to it. But the valuation level in some of these big names, big e-commerce companies, have come down so much that they are becoming quite interesting to us as value investors.
So JD.com is coming out with numbers, and I don't know if you can talk stocks, but just the e-commerce side of things, e-commerce business. This is an entity that's listed in this region as well as the U.S. Has a Hong Kong listing too. I mean, what do you make of the revenue slowdown, the slowdown in profits that we are expecting to see despite the regulatory overhang? So there's one aspect on the valuation part, but these stocks are cheap for good reason.
Yeah, no, that's a good point. I think for some of these big tech stocks, on the e-commerce side especially, part of the negative driver or drag on the performance this year has been just general Chinese consumer slowdown. So on the flip side of that is eventually the COVID-0 policy in China will hopefully end. We don't know when that is. We don't know if it's November or summer next year, but eventually that will end. And I think what you will see is a lot of these companies, JD and otherwise, might become a proxy in the way the global investors are investing into the Chinese recovery story.